Here are the top 10 favorite Canadian growth investments that I've noticed on Reddit. So I've spoken about growth investments being better in the long term over dividend-focused stocks because the business feeds themselves first before feeding you. Although it sounds odd and everyone wants to eat first, like a boyfriend waiting for his girlfriend to take an Instagram picture, what this does is make the business potentially much larger in size and make more money over time, while returning the favor much more in later years. Or there's always the case like BlackBerry or RIM, taking years to believe that people still wanted their phones before realizing that all the money that they spent on research and development went to waste and they ended up dropping the whole thing. Before we start, smash the like button and subscribe to my channel. Let me know in the comments below what's your fastest growing investment. So in no particular order with the top 10 Canadian growth names, here we go. When millennials are giving up their chance of home ownership to travel and to go on vacations around the world, to boost their Instagram game, Air Canada is there to gladly take their money. In the past, airlines were a badly run industry where any money invested would be completely wasted and instantly get thrown in the fire. Air Canada became outrageously profitable after big investors came in to kick the industry's ass and make things more efficient, things such as smoother airport lineups and a good mobile app. The company IPO'd midway into 2010, but a $10,000 investment in Air Canada would have grown to around $218,000. It doesn't give out any dividends, but their annual growth for the last 9.5 years was still 38%. So who do you think can deal with your crap on a week-to-week basis? Not me, but there's a good chance that Waste Connections is your soulmate, because they probably do your garbage disposal and recycling every week. The company also deals with the residual crap that oil companies leave behind. For the most part, Waste Connections is a pretty dirty but good cash-flowing pig of a business. The company buys out smaller mom-and-pop garbage shops in North America and then improves their costs because the wife isn't enough to count as the entire accounting department. The company then takes those cash flows and buys even more mom-and-pop shops. A $10,000 investment in Waste Connections would have grown to around $67,000, and then you would have received around $2,500 in dividends for a combined total of $69,000. Which is an annual growth of 22.6% after a decade. Every time you need to put in gas or buy lottery tickets, Red Bull, or cigarettes, you might be going to a Circle K or Max convenience store, and that means you're supporting Alimentation Couche-Tard. Trust me when I say that they're safe and don't keep guns behind the counters.
I think they'd actually shoot back at us.
Well, of course they're shooting back at us. You're robbing their store.
The big growth plan with Couche-Tard is that they're trying to unite all the convenience stores and gas stations around the world under one brand and system. Maybe except parts of Asia, because 7-Eleven dominates there, and I feel like there's a 7-Eleven in every 100 meters of a lot of major cities. A $10,000 investment in Couche-Tard would have grown to $119,000, and you would have received $3,300 in dividends for a combined total of $122,000. That's an annual growth rate of 28.4% over the past decade. Do you see this combination of food here? It's the Tim Hortons, Burger King, Popeyes meal combo called Restaurant Brands International. The company's big plan is to expand their location account around the world through their franchise model. They also plan to give everyone a taste of their overhyped chicken sandwich. Here's what happens when you don't give people their coffee and chicken.
Welcome to Colonel's Fried Chicken. Unfortunately,
Until I kiss my chicken.
Although the company has only been on the stock market for 5 years, a $10,000 investment in Restaurant Brands would have grown to around $18,000, and you would have received around $1,300 in dividends for a combined total of $19,500. That's an annual growth rate of 14.3%. So if you can learn to save $1,000 quickly in my other video, then you can start your own dollar store with 1,000 items. Dollarama runs stores pretty much everywhere in Canada and has even started to branch out to parts in South America with its half ownership in Dollar City. With the average store in Canada making $2.2 million in annual sales and $500,000 in profits, the dollar store would make the perfect franchise if they allowed it, and that's actually even more than how much a McDonald's franchise makes in terms of profits. A $10,000 investment in Dollarama would have grown to around $120,000, and you would have received $2,700 in dividends for a combined total of $122,500. That's an annual growth rate of 28.5% over the past decade. Who hasn't heard of e-commerce millionaires driving Lamborghinis and selling courses on how to do that on YouTube? Well, Shopify is a platform that allows shopkeepers to create an online store and sell stuff online, mostly stuff made in China, to people around the world. Shopkeepers can then buy Shopify app features to improve their sales. Features like these timers that create buying urgency and make people go crazy. Guess what? Nothing happens when they go to zero. The timer either resets or stays at zero, and you can still buy afterwards. Although the company IPO'd in mid-2015, a $10,000 investment in Shopify would have grown to $154,000. There's no dividends, but that's an annual growth of around 83.6%. The next company is Canadian National Railway. It's quite heavily owned by Bill Gates. It's almost 10% of his foundation's investment portfolio. When you're not waiting 15 minutes on the road for the train to pass so you can keep driving, Canadian National Railway literally delivers almost everything from grain, fertilizer, lumber, metals, petroleum, and even consumer products. Some of their big customers include Loblaws, Walmart, Ford, and Pepsi. A $10,000 investment in the railway would have grown to around $41,000, and you would have received over $4,000 in dividends for a combined total of $45,000, which is an annual growth rate of 16.3% this decade. The next company is Brookfield Asset Management. The company manages investment funds that own businesses in various industries like big commercial properties, utilities, renewable energy, and other stable businesses. They essentially run private businesses around the world, make them much better, sell them for a high price tag, take the money, and buy new businesses to fix. It's pretty much a Brookfield fixer-upper program. A $10,000 investment in Brookfield Asset Management would have grown to around $49,700, and you would have received around $3,700 in dividends for a combined total of around $53,000. That's an annual growth rate of 18.2% this decade. The next name is Constellation Software, and they're a company that buys smaller yet profitable technologies with clients in industries such as education, manufacturing, agriculture, and hospitality. For them, it's almost like they're buying rental properties, but they're buying small, stable technology companies, and then they use the money that they generate from those companies to buy even more of them, and occasionally a big company too. A $10,000 investment in Constellation would have grown to around $343,000, and you would have received around $10,700 in dividends for a combined total of around $354,000. That's an annual growth rate of 42.8% this decade. Last on the list is Lightspeed POS. The company provides small to medium-sized retail and restaurant businesses with point-of-sale solutions. It's a fairly new company with only 10 months on the stock market, but a $10,000 investment in Lightspeed at the start would have grown to around $15,800. That's an annualized growth rate of 73.7%. So if you managed to make it this far through the video, here's an investment summary of all 10 names I've mentioned today. Although the time on the stock market hasn't been the same for all 10 investments, a good comparison is to look at the annualized growth on the very right column.